Hello everyone, thanks for checking out my video. This is a year-end special edition video where I do a quick review of my main stock investment portfolio as well as share with you how I earn about 15,000 Singapore dollars of side income for the year of 2024. I will also be covering some of my thoughts for 2025. So if you're curious to find out more, do watch throughout the video, alright? To start things off, let me explain why I am making this video. First, I wanted to review how my stock investment portfolio has performed after about 3 years of investing. Yes, you heard that right, I am still pretty new in the stock market. Second, my YouTube channel has also just hit its 3-year mark, so I thought it would be a great opportunity to mark this little milestone with a special edition video. Lastly, I am actually considering making this an annual tradition to reflect on my portfolio, share key insights, and recap the lessons learned over the year. Before diving in, let me clarify a few things. This video focuses solely on my main equity portfolio held with brokerage. I have excluded accounts like IBKR, Tiger, Syfe, and Longbridge, as the amount in those accounts are negligible. And for simplicity, I am also not including other asset classes like bonds. Last of all, please pardon me, I won't be disclosing the exact value of my portfolio for confidentiality reasons. If you are good with all this that I have mentioned, let's get started. Alright, so for the first time in my 3 years on YouTube, I am revealing the exact stocks that I hold in my equity portfolio. Here's an overview of the stocks in my account. My largest holding is none other than Tesla. No surprises here, especially if you have been following my channel or investment journey. As you can see, my portfolio mainly makes up of 6 of the magnificent 7 stocks, with Amazon being the only one that I don't own. If you are wondering why, here's the reason. I started investing in the US stock market back in 2021. During that time, I spent a significant amount of time and effort researching and selecting stocks. Back then, the term Magnificent 7 hadn't even been created yet, and somehow, whether by luck or through my diligent research, I was fortunate enough to shortlist 6 out of the eventual Magnificent 7 stocks after researching and analyzing the stock market and various companies. I actually created one particular video that covers 5 of the Mag 7 stocks I own, which are Nvidia, Microsoft, Apple, Google, and Facebook, which is now known as Meta. If you are interested, I have linked that video at the top. As for Tesla, I have a few other videos dedicated to it, so feel free to check out my older content for more details. Just search for Tesla on my channel will do. Okay, now coming back to Amazon, the one stock from the Magnificent 7 that I don't hold. Honestly, I can't recall exactly why I didn't dive into it back then. Perhaps it's because at that point, I viewed Amazon as just an e-commerce company, which is a highly competitive industry, and I didn't dig deeper into their AWS cloud computing, online advertising, or streaming businesses, so I didn't gain enough insights and conviction to invest in it. Alright, let's get back to my portfolio. In terms of the weightage, the Mag 6 stocks account for a massive 97% of my holdings. I also have 2.4% in VOO, which represents the S&P 500, and the remaining 1% is negligible. Just to share, I added a small position in Salesforce this year. It's just a tiny stake, mainly to get some skin in the game while I monitor the company's growth trajectory. As for Snapchat, I have to admit it was a typical beginner's mistake, buying it without doing much research. Lastly, for Grab and Lucid, they are free shares that I received from Moomoo back in 2021 or 2022 as part of some contest I participated in. In summary, my portfolio is highly and very concentrated in technology sector. This heavy allocation meant that during the 2022 bear market, my portfolio took a significant hit, dropping by 44% for the year. Well, despite those challenges, I held my ground by not selling any shares. In fact, I even added more shares along the way. And as of now, over 3 years in the US stock market, my portfolio has bounced back and grown quite a fair bit, approximately 72%. Okay, maybe not extraordinary or super fantastic, but decent enough for me. Oh, by the way, if you notice, my portfolio doesn't include any Singapore, China or Hong Kong stocks. The reasons are quite simple. First, the US stock market offers much higher growth potential compared to the Singapore's market. While the US market does come with higher perceived risk and greater volatility, I believe my time horizon allows me to ride out these fluctuations and volatility. As for China or Hong Kong stocks, I am hesitant mainly due to the concerns over regulatory pressures from the Chinese government and geopolitical tensions involving Hong Kong, Taiwan, China and the US. Okay, to wrap up this portfolio review segment, let's talk about my performance for 2024 and my top winners and losers. As of 18 December, my portfolio is up approximately 30%, slightly outperforming the S&P 500. However, to be really honest and transparent with you, without Tesla's recent rally that started in late October, my portfolio would only be up about 21%, which underperforms the S&P 500. Well, maybe and perhaps I could have just invested in the S&P 500 or Nasdaq, do nothing and still get roughly the same returns. Okay, all I can say is, personally, I think there is more excitement and satisfaction in actively managing my investments, and I'm more into stock picking. However, for those who don't have time to follow the markets or ain't particularly interested in the stock market, buying the S&P 500 is probably one of the simplest way to invest in the equity market. It ultimately depends on individual preferences. But that being said, I am also building a S&P 500 portfolio by the side just in case any of my stock picking decisions don't pan out. Alright, now let's move on to 2024's highlights. My top 5 gainers are Nvidia, Tesla, Google, Meta and Apple. On the flip side, I actually only have 2 losers. One of them, Lucid, as shared earlier, is a free share that I received from Momo. That leaves Snapchat as my only losing stock for the year. I'm keeping it in my portfolio as a reminder not to take impulsive and poorly researched or blind decisions in the future. Okay, moving over to my side income through options trading. First of all, let me start this segment by saying that there are some traders and content creators out there who shared they can make 10,000 to 20,000 per month through options trading. Personally, I am not at that level yet in terms of skill, portfolio size or risk level. For me, I have only managed to earn a modest low 5-figure sum in one entire year. To be honest, if I can consistently make $10,000 per month from options trading, I would probably have quit my job by now. So if you are a salaried worker like me, you might find my approach to options trading more relatable. And if earning $10,000 a year feels a bit more realistic and achievable to you compared to $10,000 a month, and if this aligns with your risk appetite, I mean, after all, higher returns like 10k per month often come with higher risk, then stick around for this segment as I walk you through how I do it. But before I move on, I would like to address a common misconception that options trading is very dangerous and risky and therefore one should stay away from it. Okay, while it is true that options trading involves more risk than simply buying and selling stocks because it's essentially a leverage tool, I believe that with proper risk management, it can be a viable option and way to earn additional income. Think of it as a double-edged sword. The potential for profits come with a need for caution and discipline. It is also like how water can both float a boat and cause it to capsize. Anyway, the strategy that I use to generate side income is a well-known and common approach called the wheel strategy. If you are not familiar with it, check out the video that I have done on explaining this strategy. I have linked it at the top right hand corner. In fact, I have a playlist covering the basics of options trading, all designed to be beginner friendly. Feel free to check them out if you are just getting started. Honestly, learning about options trading has been one of the most valuable skills I have gained, not just since graduating from schools, but perhaps in my life so far. I am really not kidding, because at least for me, it has been a game changer in terms of financial growth and generating side income. Okay, I digress. Going back to risk management, there are some key rules I follow to manage the risk associated with the options wheel strategy. As you know, the wheel strategy involves selling put and call options, and basically rinse and repeat. My main rules are simple: no naked options. I always make sure my puts are cash secured and my calls are covered. When it comes to covered calls, I am extra cautious. I try to avoid selling options at a strike price below my cost price, as I don't want the shares to be caught away at a loss. But to be transparent with all the viewers, I do sell covered calls below my strike price sometimes, but I wouldn't recommend it unless you are experienced in options trading, you understand technical analysis, and are prepared to take on potential losses. For most people, it is safer to stick to covered calls with a strike price above your cost price. Last of all, I only apply the whale strategy to fundamentally strong companies that I don't mind getting assigned and are comfortable holding in my long-term portfolio. I avoid meme stocks or companies that I don't fully understand, even if they are considered good companies, for example Amazon. Let's now dive into the details of my trades. I have made a total of 51 trades using options wheel strategy in 2024. As you can see on the screen, the majority of my trades, 31 out of 51, were in Tesla. The second most traded stock is Google, making up about 16% of my trades. The remaining stocks, Apple, Bank of America, Microsoft and Nvidia, each takes up roughly 6%. The reason for Tesla being the most traded stock is due to its volatility. Basically, higher volatility translates to higher premiums, which benefits option sellers like me. In addition, I am more familiar with Tesla's price movements, which makes it a stock I am more comfortable trading. If I could recall, throughout the entire year of 2024, I only had 2 early assignments, which is on Tesla. But eventually, all of these shares were caught away at the same strike price I got assigned for after earning some premiums from covered calls. In hindsight, if I had held on to those shares, I would have made much more profits. But of course, hindsight is always 20 out of 20. So here's a key lesson I learned. When trading the options wheel strategy, it is important to segregate your shares. You need to set aside the shares you are willing to let go of, with no emotional attach. Don't dwell on the potential upside if the share price skyrockets after they got caught away. Think about it from another angle. It could just as easily go the other way, leaving you back holding a huge load of the shares. And personally, I always believe in these principles or beliefs. Nobody ever gets poor by taking profits. And also, focus on the profits that you took off the table and not the profits you left on the table. On the other hand, earmark those core shares that you want to keep in your long-term portfolio. And for those shares, you must be cautious when selling covered calls to avoid having them caught away. Anyway, I won't be showing the full list of my trades in this video, but if you have been following my channel, you would have noticed that I have been sharing every single one of my options wheel trades transparently throughout the entire year. This means if you have watched all my videos, you would have been able to catch every single trade, unless I missed out a few unintentionally. So here you go, the total profit from my options wheel strategy is around 11,000 US dollars, which is about 15,000 Singapore dollars. In terms of percentage return, I want to be transparent, it's not that high, at around 13%. Actually, the return was higher earlier on, but for some trades, I chose to go for safer and higher win rate strike prices for quick profits, thus sacrificing some of the percentage returns. For example, I recently sold 3 put contracts on Tesla with a low ROI just to pocket a few $100 for the festive season, and it worked out quite well. Honestly, as long as I am getting a decent side income from this strategy, I am contented. Let's now cover some learnings and takeaways from 2024 and from my portfolio in general. First up, patience pays off. Holding steady through challenging times like the bear market of 2022 has proven to be a game changer for my portfolio growth in 2024. This simply reinforced the importance of maintaining a long-term perspective and staying committed even when the market tests your conviction on the companies you are invested in. Next is regarding the importance of research. My early and beginner's mistakes such as buying Snapchat without proper due diligence has highlighted the cost of impulsive decisions. But fortunately, I did not go big on Snapchat back then. On the flip side, the small success with the magnificent 6 stocks in my portfolio shows the payoff of thorough research and understanding the fundamentals before investing. Third takeaway, sector concentration risk. Having a tech-heavy portfolio has been a double-edged sword. On one hand, it allowed me to capitalize on the AI boom and the growth of these high-performing tech giants. On the other hand, it exposed me to significant volatility with huge and wild swings in the share prices every now and then. This brings me to the next takeaway, diversification. I know my main portfolio is very concentrated on tech industry, hence I have added S&P 500 to provide a bit of balance and safety net. Though of course one could argue that I am still heavily invested in the US market, but that's the market I believe in at the moment. And here's the final takeaway. To quote Warren Buffett, be fearful when others are greedy and to be greedy only when others are fearful. And to also quote Baron Rothschild, buy when there's blood on the street. Back in 2022, during the bear market, many investors were too fearful to enter the US stock market because there was so much blood on the street. The market sentiment was really negative. However, that was actually the year I took a more aggressive approach and started to buy shares of companies in my current portfolio. I picked up Google when it was trading between 80 to 100, Apple in the 120s and 130s range, and Tesla when it was below 180. Fast forward to 2024, all of these stocks have reached their respective all-time highs. But as the market rallied to record highs more than 55 times this year, I am starting to get a little cautious because now the market is getting greedy. With that said, I didn't stop adding to my positions this year, but I did so at a much slower pace, which I shared some of my buy trades in my weekly videos. By doing so, it allows me to still catch some upsides as the market continues to rocket higher. At the same time, I am also building my cash reserve. This way, should another bear market or market correction come in the near future, I will be ready to deploy those cash. To wrap up this video, let me share some quick thoughts on 2025. There are 3 key things that I personally will be looking out for. First is the AI innovations and technological advancements. AI has been a significant driver of growth in 2024, benefiting companies like Nvidia, Microsoft, and Google, etc. Not breaking any news here, but this AI trend definitely still has room to run in 2025. Even though the valuations of these AI-related US companies are becoming stretched. I personally believe that AI and automation will remain the key drivers of growth in the global economy, not just in the United States. However, many US tech giants will benefit the most as they lead this AI revolution. That being said, their valuations are rising day by day, and I expect the market and investors to increasingly demand greater profitability and growth. In short, these AI innovations need to translate to solid performances. The bar is being set higher and higher as we speak. The next thing to pay attention to is the macroeconomic landscape. Currently, the market sentiment favors a soft landing for the US economy, with rate cuts started in 2024 and expected to continue into 2025. However, recent economic data suggests that inflation still poses a potential challenge for the stock market, as inflationary pressures could persist into 2025. The Federal Reserve will need to tread very carefully with their rate-cutting strategy next year. The last thing to watch would be the potential impact of Trump 2.0. Donald Trump will be a wildcard in 2025, as his policies will continue to play a significant role in shaping macroeconomic conditions and market dynamics. Many of his policies could potentially reignite inflation, which may prevent the Fed from lowering interest rates, something that would not bode well with the stock market. All in all, as with any year, it is important to remain optimistic yet cautious when investing, especially with stock valuations near their peak. Despite the challenges, corporate earnings will remain the key driver and support for stock market resilience. As long as companies continue to deliver strong results, their share prices should perform well. Even in a bear market, these strong companies will likely recover faster than others. Alright, that concludes my portfolio review, my side income through options wheel strategy, and my sharing of the market outlook for 2025. Thank you for joining me on this year-end reflection. I hope you found them insightful. How was your 2024 investment portfolio? Could you briefly share with me in the comment section below? Would love to hear them. And if you enjoyed this video, don't forget to like and share it with your friends. Thanks for watching, and I will see you in the next one.